What's happening, everybody? We're now, what's going on? This is the live charting session for the week of July 24th. We'll start off looking at SPY, then we'll look at QQQ, then we'll take a look at some other names that I like opportunities for this week. So let's get right into it. So last week we did have a nice clean break of our bull trigger on SPY. We did achieve target one, didn't get all the way up to target two, and we didn't have any downside triggers on the SPY last week. Um, so I am going to go ahead and update the upside first, and then we'll move to the downside. We're just going to move some of these just out of the way. Okay, so we see that we have some clear resistance here around this 455 level. You see today on Monday that it had resistance right there. So for me, this week, I'm going to move my bull trigger up to that level, above that 455.04. That's going to make my first target the the bottom of the supply zone. And then, of course, you all know using the methodology, I like to measure my gaps. We're going to go from the top of this zone to the bottom of this zone. And we're going to just extend this out to see what that 50% point is. And we're going to tag that right there. So now we can remove that Fibonacci retracement from our chart. All right. And then we'll have the next target be at the top of that zone. All right. So let's make sure we have our nomenclature right. This is going to be target one. This is going to be target two. And oh, that's not the right color. And then we're going to make the top of the zone target three. Again, just using previous supply and demand zones that I have identified on the chart. See if I can show you all where that's from. It's just an old zone that I had identified from 2022. And then above that, right? So one thing I did not do, which I normally do, let's go to my weekly chart. I add the ATR study to this chart. This will just give me a upper and lower bound. So we see that the ATR is about $11 on the week. So going back to where we closed on Friday, we closed on Friday at 452.18. So we need $11 range to the upside, $11 range to the downside. So that puts us around 441 to the downside limit and 463, 463 or so to the upside. So with targets one, two, and three, we pretty much have enough to the upside. So we don't need any additional targets there. So let's now just prepare for this downside move. So last week we did have an aggressive and conservative trigger. This week, I think we have a kind of clear resistance last week at that 452 level. So we're just going to have a regular trigger this week, a regular bear trigger, and I'm going to move that up to that 452.18 level. Okay, and then our subsequent targets after that, this area that was acting as supply, it looks like it has flipped into demand a bit. So since that is a demand area, we will start to show that some respect. So we're going to make the top of that demand area our target one to the downside. Got that name right. We're going to activate that, and we're going to move that to the upside here makes that first target at 405, 450.05. And then because that zone is so small, we won't measure that out. We will just go to the bottom of that zone and move our target two at 448.50. This is target two on SPY. And then above that, we have another nice gap here that was created that we will play the top, bottom, and middle of that gap because that gap is a bit large. So we're going to just move up these previous targets to the top of the gap. We'll move this other target to the bottom of that gap. And then we'll use our Fibonacci tool to measure the size of that gap from top to bottom. And then we just want to zoom out a little bit, find what that 50% point is. And we're going to mark that on our chart as well. All right, now we can remove this Fibonacci retracement to keep our charts really clean. So now we have, this is going to be now updating to target three. And then we'll have target four here. Right, and then we'll have our last target is target five. So now we have enough targets pretty much to the up and downside uh, for SPY this week. As I said, kind of on the market sentiment call, I do have a slightly bearish outlook on the week. I think, mid part of the week, Monday and Tuesday will be a little choppy. And then once we get interest rate decisions on Wednesday, along with reporting from Microsoft and Google, I think that will give us a little bit more sense of direction. So that pretty much has concluded our SPY markup here. And again, our levels. We'll go ahead and remove these. Our levels are over here to the right. So let's continue to move on. Let's look at, and actually before we do that, let's update the name of our drawing set. And now this is July the 24th. Cool. So let's move on to QQQ. So looking at QQQ last week, um, we did have an aggressive bull trigger. That aggressive bull trigger and conservative bull trigger. So last week started on what was the 17th. So we actually came down and retested that aggressive bull trigger at 379.15 and made our target zero and all the way up to our conservative trigger. That conservative trigger got triggered as well. And we made it up to target one and target two. So we would definitely need to update upside, and we got some downside triggers as well. So there was a lot of movement in QQQ last week. So we'll have to update to both sides here. So kind of zoom out a little bit. So that daily supply, as you see, as I've kind of denoted it here, was a previous demand zone that I was expecting to act as supply. It somewhat acted as supply, but it didn't have as much respect as I thought it would. So what I am going to do is I'm going to remove that level and that zone and just go with the ones that showed respect in the market. Okay. So week's a little interesting. Um, I'm gonna go ahead and just clear out. I don't even want last week's levels here to even start to sway my thoughts. So what I'm going to do is I'm going to go ahead and remove all price levels from this chart just so I can look at it cleanly, just based off the zones that I have identified. So QQQ does have some large gaps um, here that wasn't really filled, um, and then another one here um, that hasn't been tested either. Right, so we can see that this previous gap here is acting as demand. Um, so how large is that gap? So first thing we're going to do here, that gap does look pretty large. So we're going to measure that gap on out, and we're going to find where that 50% point is in that gap. All right, and then we'll remove the drawing. We'll go ahead and extend this out to the left. Okay, so we see that 50% point was respected today. Um, for the remainder part of the week, that 50% point is probably going to be my bear trigger. That's going to be my downside trigger. First target would be um, the bottom of the gap. Next target will be the start of this next gap. So that does put two targets pretty close to each other. Activate this, put this down a little bit. I see that it didn't fill it all the way. And then another situation where we have a pretty large gap, in which I want to go to the top of it, bottom of it, and find that 50% point. Found it here. Okay, now we can remove that from our chart and extend that out to the left. That's going to be my target 3, and then down here is going to be my target 4. Let's just go through and let's get our targets here. 1, target 2, target 3. This is ultimately going to be target 4. I did not do this, but I will go ahead and do it. Go to our weekly, figure out what our ATR is. ATR is $12.40. Okay, go back to our daily. Based off that $12.40 weekly ATR, we see that we close pretty much at like 375.50. Um, so that puts us at a downside limit of 363.50, an upside limit of um, 387 or 388. My apologies. So we'll need targets to the upside and downside to those limits. So we do need one more downside target here. And, based on my methodology, which is going to look at the next zone on the chart, which is going to be here, we're going to go to the top of that zone. That should put us pretty much top and bottom. That pretty much gives us enough targets to the up and downside. So that's going to be target 5. just to be a little thorough, um, that zone isn't that large. It's about $1.50, but we'll just measure it out. Get that 50% point there. Okay, so we'll remove this now. We have that 50% point. We'll extend that to the left. Oh, I got two lines sitting on top of each other. Okay, and then after that, we'll make that target. That's going to be target 6, and that's going to be last one down here is going to be target 7. Cool. So we pretty much have our fair trigger and downside trigger set. Now let's look at the upside. So one thing I do notice while we have this supply gap that was respected last week, we did also have another gap that was created from the close of this area to the open of this area. So we're going to make this a different color, right? Um, so we this week I'm going to have an aggressive and conservative bull trigger. As I start to look back at recent price action, this 380 level has shown a bit of resistance here with a push down, close below, and then a push up and nice retest here. So that 380 also being a whole number just kind of has a psychological, kind of one of the closest psychological levels. So I think, for me, above that, I could start to aggressively be bullish. And then after that, um, if we were to get into this gap, I'm up here at 362, 61. I think that's where I could start to be conservatively bullish. Then we'll just continue to work the system. Um, we have the gap that really stops right there. So normally, typically, I target the bottom of tops of gaps. Since this is the most recent gap, I mean this is just a older supply zone. I'm going to show more respect to the recent price action. So the top of that gap will be my target one. Target one, if I take the conservative trigger, it'll be target two. If I take the aggressive trigger, remember, anytime looking at my triggers with the aggressive trigger, the next target is always a conservative trigger. If I take the conservative trigger, the next target is always that target one. Above that, we'll go ahead again and measure out this zone that we have here from top to bottom. Here, that looks pretty clean. I will zoom that out a little bit. Use our pan tool to pull up on the chart. We'll zoom that out. We'll see that. I see that that's not as accurate as I like it. Let's pull that down a little bit. Cool. So we see the 50% point in that line is about right here. So now we're good to remove that. Oops, we removed the wrong thing. We're good to remove the Fibonacci retracement. We'll have this as our target 2. And then at the top of this zone will be our target 3. And target our close, I believe, last week that we established on QQQ was 375.63. A $12 weekly ATR needed tell us that we needed targets up to about 387. So we have more than enough targets, not as many to the downside, but the zones are a little bit larger. So the target's a little bit further away. So no, I'm not going to modify my system. I'm going to continue to mark my targets the same way I do week in and week out. One thing that I would like to do here is we previously see on this QQQ chart that we had a nice kind of run up from a previous swing low to a swing low high as in a retracement. So I want to kind of identify possible retracement levels there. Um, that might be additional levels of support resistance or key levels of interest outside of the ones I've already identified. So we're going to go to the swing high, go down to the swing low, and we see that we're sitting right here in that golden pocket. Um, Sitting right here in that golden pocket. So this is going to be a situation now that I see that. Uh, what I'm going to actually do is I'm going to modify my triggers here. I'm going to make this 50% point. I'm going to make that an aggressive trigger because it's still in the golden pocket. But where we see this confluence of the 38.2, which is the bottom of the golden pocket, um, and the bottom of that zone, we had that as a target one. I'm actually going to convert that to my conservative um, bear trigger. Still keeping the rest of the targets the same. We'll just kind of change their new nomenclature. All right. So these are my levels for SPY uh, here. So um, I am going to do another index. Uh, I'm going to just make this an index video. So I am going to do DIA and mark up IWM as well. And that will conclude our live charting setup, at least for the indices. So let's move on to the Dow. Um, the Dow very much has been on a nice tear recently. Um, we see that it had a really nice day today. We see that it had a really nice day here today as well. So let's just kind of break it down. So first thing that I notice is that we're at a pretty key level of resistance here at 355. We can just see that that has been an area of just long-term resistance on the Dow chart. That's some long-term resistance there. For me, if we were to break above that, that's also going to be my. I'm already bullish on the Dow, but that'll be my bull trigger for the week as well. Right? Um, and then when we start to look, when we start to look back at this chart, one thing that we do notice is that we do have in the short term, we do have the gap right here. So last week we see that um, from the 17th, just kind of just straight moving up until on Friday where we had somewhat of a sell-off. So that this sell-off candle in the middle of a strong uptrend starts to make me think that this could be a potential area of supply. Um, so what I'm going to do is I'm going to identify that whole candle as a potential supply candle because it is a large area. I will measure that out. We'll find that 50% point here. We'll remove the Fibonacci retracement and we'll extend that out to the left. Ooh, and we see that that's where we came down. So that halfway point through the supply candle for me probably going to be where I could aggressively go bearish um, on the Dow. And then at the bottom of that zone would be where I would probably be conservative, like where it's a little less risky to be bearish. So that's going to be our con there, right? Um, so we got our triggers set to both sides, right? So now let's just play it out. The downside is pretty easy as far as next target. Since we have a zone here, go to the top of that zone, go to the bottom of that zone. That's going to be targets 1 and 2. One, this is going to be target 2. Right. Um, we have a clear level of looks like as far as the charts are concerned. Our previous swing high level, which is kind of like here with some previous resistance, so we'll mark that. That's just previous swing high because we had this huge demand candle there, just from 346 to 350. All right, so you have demand zones, which are typically the areas that lead to those huge moves, and then you have demand candles that just are indicative of strong demand. Hence, you'll typically find demand candles have very large bodies, with very little wick on that candle, as we see on that one. So you can have those demand candles. A lot of times, also treat them the same way that you treat demand zones, right? So what I'm going to do here is measure from the top to bottom of that candle. I want to find the 50% point in that candle, and I think that's also going to be a key level of interest for me. We'll remove that. So that'll be target 3, and this will be target 4. So we haven't had a really meaningful retracement on the Dow since we created the swing low here. So I am going to use today's high down to the previous swing low and look for additional levels. So we see that we're seeing some nice confluence from previous targets that we've already identified and our Fibonacci retracements. So I'm just going to go ahead and give one more additional level here at the 38.2, which is the bottom of that golden pocket area. didn't do, but we can do really quickly. Let's go to our weekly chart. We see that the range on the Dow is pretty small compared to SPY QQQ is at $8, $8.50 or so. So that puts us, last week's close was at 352. So $8 to the downside puts us at around 344 or so. And then $8 to the upside puts us at 360. Right. Um, so if I was charting this on Sunday, the top of this zone probably would have been my aggressive, would have been my bull trigger. But since we've seen this price action here, it's a little bit above. Um, I think for me, we have that long term resistance. We're going to also make that a conservative trigger. Um, we'll make that a conservative trigger as well. We're going to use today's high as our aggressive trigger on the Dow. Okay. Um, and then above that, we're going to zoom out a bit and look at additional levels. So we kind of look back where we're at in current price action. Um, see above that kind of long term resistance level, we have probably a pretty extreme level of supply with this doji candle, island doji. So we're going to identify that as well, and then we'll just extend that out. Okay. And then we'll use the basis of that zone for the next target. So top, and there we go. So we'll just use that. And those lines look a little bit off. There we go. So that's going to be, this one's going to be target one. Then above that one, this will be target two. All right. One thing I also noticed here is there's some gaps here in this price action too. Now that I go a little further back, yeah, it's definitely a gap on the dial here, from here to here. We'll just extend that out. That's probably going to go off our previous zone. Yeah, it sure does. So I'm going to use this. I'm going to use this gap um, to base my levels off of. Change this color to my regular gray. I'm going to use a gap instead of that previous supply. Doesn't really change the levels too much, really. We'll pull that over. That'll be there. Um, and I wouldn't be surprised that if I measure this gap out, that target one probably still coincides with the 50% point of on the chart for that gap. Let's see. Yep, almost to the T. So we'll keep that there. We'll keep that there. And then technically, technically there's another gap on the Dow here. So it's kind of making it kind of easy for us. We're just going to use the bottom of this. Use the bottom of this, top of this, right? And then, of course, our trusty old Fibonacci tool and find that 50% point. It's right there at that 360 level. Interesting. And we'll go ahead and remove that from our chart now. So now we have enough targets to the upside. We'll just make sure we're naming them correctly. So that's going to be target 3. This is going to be target 4. Target 5 up there at 361. And this is going to be target 5. So pretty much good there on the Dow now. We have our targets within ATR to both sides. Chart looks complete. Chart looks really complete now. And yeah, it looks really complete. So that's the Dow. Again, I'm probably the most bullish on the Dow outside of any of the major indexes that we typically uh, look at. The last one that we will take a look at will be the small cap index, and that will be IWM. So with IWM, we looked at last week. We saw that we were kind of somewhat in this triangle formation, kind of testing the top of this trend line. Last time we tested here, we had a nice little sell off. So we kind of just zoom in a little bit on current price action. We can see that we kind of broke above it, but then had two strong rejection candles and a retest today, right? Uh, so for me, um, the bullish trigger is pretty obvious when we break back above this trend line. I think I would get bullish. Could nicely get conservative, aggressively bullish here, a little bit more conservative here. And then as far as downside, we have um, some clear support around this 194 level. So that's going to be my bear trigger for the week on IWM. That's going to be the bear trigger. This is going to be my aggressive bull. And then this will be my conservative bull. All right. So my triggers are set. Now let's just set these targets, which I pretty much already have targets set. Um, I didn't check IWM's ATR. You can see that that's pretty small, $7, so not a huge range that we have to be prepared for, really. Um, so we pretty much have, because what did we close last week at? 194.46. So $7 to the downside puts us around 187. Um, so we pretty much have enough targets here to the downside, just using the bottom and top of this gap. area. Let's remove some of this. It's not going to be in play this week. And then to the upside, I think, naturally what I would be looking for would be this next swing high. You can see based off of that swing high, we created a pretty extreme supply zone based off of that wick. So we can go to we can target the bottom of that supply zone and the top. Because that wick is very small and IWM already has a pretty small range, I am not going to measure it out. Um, and then we have another supply zone here. This has made it pretty easy for us to chart just based off of these extreme zones. And since they're so small, we don't even need to measure them. All right, so we have our targets to the upside there and targets to the downside on IWM. I won't make you all sit through me changing the color and the names on them, but these are our index levels for the week. Remember, for these trigger levels, these are not typically intraday levels. I'm looking for 15-minute closes, um, above that level, and then a pullback to that level without being breached for entry, ideally. Or if you want to be more aggressively, you could take a 5-minute close or 1 to 2 5-minute closes above the trigger level, and then get back in on the pullback candle. Uh, Two ways that you can use those triggers going into the week. If you did enjoy this video and you enjoyed this new format that I'm doing, like this video. These videos aren't public as of yet, but like it, share it to other individuals that you might see that get value from this. And let's kill it this week, team. I'm really looking forward to a really enjoyable week. We have a lot of earnings. We have FMLC interest rate decisions on Wednesday, which could make these charts look really crazy. So make sure you have your levels updated to the up and downside. And like I said, let's have another great weekend, Pack. Much love. This is TJ Trader signing out.